In 2019, approximately 3.9 million students graduated with a college degree in the United States. For many students, taking out student loans is part of their plan to reach their goal of a college degree. Before taking out student loans to pay for school, you should research different student loan options to make sure you are selecting the loans with the best terms. Let's look at the three main categories of student loans: government loans, institutional loans, and private loans. The first option for student loans are from the federal government. To apply for federal loans, students must complete the free application for federal student aid, also known as the FAFSA. Federal loans tend to have the most desirable loan terms, interest rates, and repayment options, which is why they are the most widely used student loans. Interest rates on federal loans vary from year to year, but are always a fixed interest rate and tend to be the lowest rates offered. There are two types of federal loans: federal direct loans, which are taken out in the student's name, and Parent PLUS loans, which are taken out in the parent's name. The federal direct subsidized loan will not accumulate interest as long as the student is enrolled at least part-time. The federal direct unsubsidized loan does accumulate interest during the deferment period. Eligibility for the subsidized loan is dependent on the student's financial needs status, which is determined from the FAFSA. The loan amount for which a student is eligible depends on their year and dependency status. The amount for which a student is eligible increases after their first and second academic years. First-year dependent students can borrow $5,500 and raises to $6,500 their second year. Third and fourth-year dependent students can borrow $7,500 each year. To apply for federal direct loans, students need to complete their FAFSA at studentaid.gov. After the student has completed their FAFSA, their parent can apply for a federal Parent PLUS loan at studentaid.gov. Approval for the PLUS loan depends on credit worthiness. Parent PLUS loans can be deferred while the student is enrolled at least part-time. The maximum PLUS loan amount a parent can borrow is the cost of attendance at the school the student will attend minus any other financial assistance they receive. The cost of attendance is determined by the school. If a student's cost of attendance is $46,000 and they have received a total of $13,000 in scholarships, grants, and other loans, then the maximum Parent PLUS loan limit is $46,000 minus $13,000 or $33,000. The second category of student loans are institutional loans offered from your university. Check with your financial aid office to inquire about student loan options. Loan amounts, terms, interest rates, and repayment options vary from school to school. Nevertheless, institutional loans tend to be a good option for many students. The third entity that offers student loans is the private sector. Private loans are offered by banks, credit unions, and online financial institutions, and the loans come in many different forms. Their terms typically vary. Sometimes they have a fixed interest rate, sometimes they have a variable interest rate. The loan limit for a private loan is similar to the Parent PLUS loan in that a student can borrow up to the cost of attendance minus other financial assistance. Nearly all private loans require a credit-worthy cosigner for a dependent student. Those are the undergraduate student loan options. Graduate students can also apply for direct unsubsidized loans, Graduate PLUS loans, and private loans. Whatever loans you choose, aim to minimize the amount borrowed to keep your loan balance as low as possible. Be sure to read the terms and choose the loans with the most favorable terms. Educating yourself about student loans is an important first step in higher education because feeling confident in your financial plan to pay for school will allow you to focus on your coursework. Your financial and academic success are intertwined, and we wish you the best. This video was brought to you by Money Moments.